Village banking has helped many people. Some have grown businesses, others have paid school fees, bought furniture, survived difficult seasons, and rebuilt their lives from nothing. But at the same time, many groups have collapsed, and it didn't happen because people were poor, and it didn't happen because village banking doesn't work. It happened because of avoidable mistakes that quietly destroy trust and cost thousands.
It's a brand new day with Francine Chirumbo. We're ready to go, living out the dream.
Hello everyone and welcome back to my channel. My name is Francine Chirumbo. If you are part of a village banking group, planning to join one or thinking of starting one, then listen closely because what I'm about to share with you could save your group. Today we are talking about the real mistakes that destroy village banking groups and how to avoid them before it's too late. I'm going to share with you a number of mistakes that a lot of groups are making currently. One of the biggest mistakes that some village banking groups make is starting without proper rules. So people are very excited, they are motivated, and at this point, they trust each other so much. All they want to do is just to start contributing immediately. But nobody wants to sit and discuss the structure. Nobody wants to discuss the rules, the penalties, the responsibilities, the leadership, or what happens when problems come. Then 6 months down the line, they experience a number of problems. One person delays payment, another wants to leave the group suddenly, another member refuses to pay back, then there's confusion, right? Every village banking group must have clear written rules. You need rules for contributions, you need rules for loan repayments, for penalties, for meetings, for leadership, and member responsibilities. So even if your group is made up of relatives, for instance, church members or close friends, please have rules. Trust is very important, but structure will protect your group. Mistake number 2 is saving too little before starting the loans. Another mistake some groups make is rushing into lending too quickly. So people contribute for 1 month and then immediately start asking for loans. This is very dangerous. You must know that. A strong village banking group is built on saving first. All right. So a savings group will build discipline. It will build trust and also create stability. If people cannot save consistently, how will they repay the loans consistently? Some groups collapse because they started lending before building a strong savings culture. Take time first. Observe the members. See who contributes faithfully. See who attends meetings consistently. So village banking is not a race. Let's move on to mistake number 3, giving loans based on emotions. This mistake destroys many groups. Sometimes someone comes with a very emotional story. There may be sickness at home. Maybe there is pressure. This person is under pressure. They may be having an emergency. Then the group feels bad and gives a loan without proper assessment. Now listen carefully. Village banking is not a charity. You can care about people without destroying the group system. All right. Before approving a loan, ask yourselves, how will this person repay? Do they have income? Are they already struggling financially? Is the loan amount realistic? You can support someone emotionally, all right? Some people need emotional support. Others just really need advice. So advise them. You can also allow them more time to save first, but don't put the whole group at risk because of emotions. One careless loan can affect everybody. You know how that happens, right? Oh, I've got this that is happening at home. I just needed to do this. And it is story after story. You need to evaluate that. You need to ask yourselves those questions that I just posed. All right. Number 4, not understanding shared responsibility. One thing many people fail to understand is that village banking affects everybody in the group. When one person fails to pay back, the entire group suffers. That means future loans become difficult, okay? Meetings become tense. Trust starts breaking, and everyone's savings are affected. That's a fact. Some people think it's her loan, it's not my loan, it's not my business. But village banking does not work like that. This is why groups must be careful when approving loans. Imagine 15 people contributing every month faithfully for almost a year. Then one member gets a very large loan and disappears. Abutuk. And they run away. You know what I'm talking about? You've been there. You give one person one large loan. I remember giving a story on my Facebook page about this one woman. She borrowed money. She wanted to buy a vehicle. She wanted to buy that car for her business. And, no, I'm going to repay when I get my car. I'm going to use it for business, and then I'm going to generate an income from there. It didn't happen. She was scammed. She got money from the group. She was scammed. She didn't get her car. That's what I'm talking about. There was no money. Okay. All right. I'm laughing about it now, but it's really serious. But these are issues that are happening. She got money from the group, a lot of money from the group. The group had paid. And then she went out to buy a car and she couldn't get the car. She got scammed and then she lost the money. The group lost everything. This is what I'm talking about. In short, she failed to pay the money back. This is how many groups collapse. Village banking needs accountability. Whether you like it or not, it needs accountability. Number 5, poor record keeping. This is something I talk about all the time. It's a very serious mistake. Some groups keep records in people's heads. Others write figures on loose paper that disappear. Then after some months, confusion begins. People start asking, how much did I contribute? Nalipile shinga? Didn't I pay? I already paid. How much interest do you mean? They ask all kinds of questions. Where did the money go? And before you know it, meetings turn into arguments. Good record keeping is not optional. You need proper records, You need the records for contributions, for loans, for repayments, for penalties, attendance. You keep every record and savings balances. Everything must be documented. It must be written clearly. And very importantly, the information must be transparent. Okay. People trust systems that are open. Mistake number 6. Choosing the wrong leaders is also a problem. Another costly mistake is choosing leaders based on friendship instead of character. You have to look at the character, not on the friendship. Just because someone is popular, loud, confident, or educated does not mean they should handle group money. Village banking leaders must be honest, firstly. They must be organized. They must be disciplined. They must be transparent and accountable. Not pantfemu nandi. Some groups lose money because leaders misuse funds. They borrow secretly. They delay banking the money or fail to report properly. Actually, delaying banking the money is a problem. This is something that you must really look at. The leaders will keep the money. They won't take it to the bank immediately. Okay, so that's a story for another day. But I want us to look at the kind of leaders that you have. And sometimes the leaders fail to report properly. And once trust is broken, it becomes very difficult to repair the group. Please choose people with integrity. Okay, money reveals character very quickly. Mistake number 7, allowing late payment without consequences. This is another silent problem. You can put it aside. If people delay contributions every month and nothing happens, discipline slowly disappears. That is how a human being works. Soon meetings delay, repayments become inconsistent, commitment weakens, and serious members become very frustrated. If you're a serious member like me, I'm very serious, I'll be frustrated. Penalties are not there to punish people. Trust me, they just protect the system. Even small penalties encourage seriousness and accountability because village banking only works when people respect the commitment. You need to have people who are committed. You need to understand, you need to have people that understand how the system works. So you can't just say, I can't pay today. I don't have enough money. I had an emergency, therefore I couldn't pay. No, you have to be committed. Okay, let's move on to the next point. Mistake number 8, giving very large loans too early. Some groups make the mistake of giving out very large loans too early. Someone contributes for 2 months only and suddenly wants a huge loan. That is risky. A group must grow gradually. Start with small loans. Observe repayment behavior first. Build trust over time. Professional lending institutions, like banks, also start small before increasing loan amounts. Why? Because repayment behavior matters more than promises. Some people speak very well during meetings, but when repayment time comes, problems begin. Do not rush the process. Okay. Mistake number 9. Mixing personal issues with group money. This mistake is very common. Personal conflicts enter financial meetings. Maybe relatives are fighting. Maybe 2 friends stop talking to each other. Maybe there is gossip in the group. Then suddenly, bang, long decisions become emotional. Village banking meetings must remain professional. That's what you must know. Focus on savings. Focus on loans. Focus on repayments. Focus on accountability and group progress. Not avoid gossip, avoid divisions, avoid forming small cliques inside the group. Once division enters, financial stability weakens. Okay, don't listen to gossip. Mistake number 10, using the money unwisely. Another mistake some groups make is misunderstanding the purpose of village banking. Village banking is not about chasing quick profits or risky investments. No, the goal is to help members become financially stronger over time. Not if you are Rubido. The money should help people. Okay, it should help people survive emergencies, grow small businesses, or even pay school fees, perhaps even reduce dependency on expensive debts. Okay, so please remember, a successful group is not the one giving the biggest loans. A successful group is the one where members are becoming more financially stable. Sometimes groups lose money because they start taking unnecessary risks, trying to grow the money. Interest. Village banking works best when the focus remains on discipline, on savings, on accountability, and wise financial decisions. That is what you must remember. Mistake number 11, lack of financial education. Many people join village banking without understanding. They don't know what interest is. They don't know what debt is. They don't know what savings are. They have no idea about budgeting or financial discipline. They just want to borrow, and that creates confusion. Financial education is very, very important. Members need to understand how loans work, how interest works, why repayment matters, and how borrowing can either help or destroy them financially. On interest, I just want to say something. A lot of people are so shocked when they have been missing payments and then they see their bill, they see how much they are owing, they want to collapse. They don't realize that when you get that 10,000 kwacha, it's going to end up being 100,000 kwacha within a short time. It's because they did not understand what interest is about. They just feel, I borrowed 10,000 kwacha, the interest rate is 5% or 10%. Oh, then I owe them 1,000 kwacha, then I can get this money. I owe them 2,000 kwacha. At the end of the cycle, you'll be shocked how much you are owing if you don't understand these simple basics. They are basics, but they're very important. Financial education is very important. And then there are some people who borrow money without a repayment plan. Others borrow simply because money is available. Eko shirimpia n'abatura tusende bonse. It doesn't work like that. That becomes very dangerous. A financially educated group becomes stronger and more stable. Okay, not if mpia n'abatula katuye tusende bonse, because everybody has brought the money, they have put the money on the table, and that money needs to be taken. Shouldn't work like that. You should have a plan of how you're going to pay back that money. Okay, this is the education that is required for each group. One thing I know is that village banking can either build people or divide people. Money has a way of revealing character. That is why honesty, discipline, and transparency matter so much. And honestly, some groups fail, not because the system is bad. They fail because people refuse accountability. But when village banking is done properly, it can truly change lives. Families survive difficult seasons. Women become financially independent. I say women because they are the ones who mostly participate in village banking. But village banking is not only for women. Okay. Small businesses grow. People learn financial discipline. Communities become stronger. And when it is mismanaged, the same system that was supposed to help people becomes the very thing that destroys trust, friendships, and money. So before I end today's episode, let's quickly summarize the mistakes we discussed. Okay. Number 1, starting without clear rules, lending too quickly, emotional lending, ignoring shared responsibility, poor record keeping, choosing the wrong leaders, allowing late payments without consequences, giving large loans too early, mixing personal issues with finances, using money unwisely, and lack of financial education. If your group can avoid these mistakes, you are not just protecting money. You are protecting relationships, trust, and the future of the entire group. Because one mistake is enough to collapse what took years to build. Now, I want to hear from you. Have you ever experienced problems in a village banking group? Share your experience in the comments. Your story might help someone else avoid the same mistake. And if this episode helped you, please like, subscribe, and share this video with someone involved in village banking. Thank you so much for watching. I will see you in the next episode.